Okay, here's our broader market update. We'll start with the S&P 500. It is September 15th. It does happen to be merge day, but we're not going to talk about crypto here. We're going to talk about the broader markets, which are affecting crypto in a negative way. So we'll start in the daily chart. Last video, we talked about how, yikes, that's not a good look. We also have a gap down. That's probably going to get filled on the way back up. But we talked about the idea that we were going to break this low based on this pattern. We almost did that, didn't quite get there, although the futures have basically taken out that low. So you imagine we probably open with a gap down tomorrow, though maybe we get a rebound. So, we could still close. We could still close higher on Friday, right? Like some kind of red to green. But this certainly has all the looks of a weekly cycle decline. Now, the thing that like cycle analysts will say is, well, the first cycle can't fail, right? But this is actually the second cycle. So that is actually fair game, because if this was your ICL and then you had this rally, this was your daily cycle low, totally fair game for this one to fail. And even if that weren't the case, I do want to be careful. Let's just add the 10-day moving average again. So clearly had a little loop, like a little period here where we ticked up while we were going higher, and now we're getting back down. This has all the looks of a daily cycle decline. It is day 7, and most importantly, we talked about this weeks ago. After that Jackson Hole meeting, we had this big swing high below 42.20. We had 2 weeks of follow through to the downside. Then we had this bullish outside weekly candle, and now we're going to get a bearish outside weekly candle to follow the bullish one. Pretty crazy setup. So 2 bullish candles in a row in the opposite direction. Not a good look. It's week 13. Again, last cycle topped out on last cycle bottomed on week 16. So we would expect this one is probably going to be longer, especially since the cycle before that was only 20 weeks, whereas these are usually more like 25. So that suggests there could be a lot more downside. Let's just kind of play this out, right? If we just look at, so we're on week 13, we know that. What if we say this cycle is going to be 25 weeks, right? Let's just say, hypothetically. So that would put us at an early December daily cycle, an early December weekly cycle low. And then if that next cycle goes for another 12 weeks would get you to your February-ish. Let's see if that next cycle is 20 weeks. Like, imagine if we get 2 more, like we finish this cycle and then we get 1 more bearish cycle to the low. That could see us bottoming in sometime around April 2023. So again, this cycle will go lower. We'd have another rebound, and then potentially another bearish weekly cycle to kind of finally end the decline. So we'll be watching for that. That's just a scenario to be aware of. The immediate move right now is more downside, although there'll probably be a temporary rebound, a temporary bounce. And if we look at the monthly chart, I mean, these are all of these signals are telling you literally the same thing. What is this showing us? We're below last month's low. What does that mean? It means we're making lower lows on the monthly chart. It's a bad sign. If you add that to this lower high, right? So we went down, then we came up, and now the presumption is we're going to make a low below the June low. That's what this is setting up. We could absolutely get a bullish reversal before that happens. But given we topped out on day 4 of a daily cycle, it's like the setup is absolutely here. What I'll say is we do have the Fed meeting coming, the Fed announcement, I should say, coming up on Wednesday of this coming week. You could see a world where that sparks your little short-term rally. That's definitely going to be a pivot point. The market is probably waiting to see, is the Fed going to raise 75 bips, or are they going to raise, or is it going to be like 1? And I think even more importantly, looking for some guidance on what they're going to do after that. QQQ, same count, day 7. It's in weekly cycle decline. And in this case, we actually already went below that. We've already made a bearish outside weekly candle, whereas S&P is like, potentially it's going to make one by tomorrow, given what the futures are doing. But that just tells you the Qs are weaker than the S&P. And again, on the monthly chart, I mean, I hope you're seeing this I hope you're learning these things from looking at this channel. this monthly chart is not something you'd want to be long in. Like, look at this thing. We had this really ugly reversal candle, right? Because this was green at one point. Not anymore. It closed very red. And then this was green too, and now we're very red. That's telling you the rallies are being sold. It's month 30, probably moving into a 36-month cycle low. And again, the Qs are underperforming the other indices. And IWM small caps, also day 7. But notice it's much further from making a bearish outside weekly candle. And I mentioned this, that this probably gets dragged down by the other indices. So if anything, a short opportunity for it to kind of catch up to the other ones in terms of downside. And if we look at Dixie, which is definitely contributing a lot to this, you know, that month, is this, yeah, this is your weekly candle. So it's trying to make a bullish outside weekly candle. Who knows if we probably don't get there given we have just one more day of trading. But this chart looks incredibly bullish in contrast. I mean, look at this. It's a clean uptrend. Higher high, higher low, higher high, higher low, higher high, higher low. This is your classic uptrend. So it looks like there's probably downside in the markets for the next, you know, call it 10 to 12 weeks.